going to introduce this. Hi everyone, and welcome to The Hash. We are wrapping up another week here, bringing you all the latest and greatest in crypto and culture. My name is Naomi Brockwell. We have Ben Powers, Sanasie, Will Foxley, and Zack, Seward. And we're going to start off the day by talking about Coinbase. So Zack, what have we got there?
Thanks, Naomi Brockwell. Appreciate you. We got a couple of Coinbase items we're going to talk about today. First one, ICE, the parent company of the New York Stock Exchange, cashing out big time on its investment in Coinbase from its Series C some years ago. They sold their shares in the now publicly listed Coinbase for a whopping $1.2 billion. And now we get to see some of the ramifications of the Coinbase public listing. So this is a big dollar, big ticket item here. What does it show us? What does it show us? Will, what does this show us?
Well, I'm just wondering where they're going to put that money. Like $1.2 billion is a lot of cash. And a lot of people have thought that as we see these public crypto companies go out the door on IPOing or direct listings like Coinbase, that we're going to see that money kind of recycled back into the crypto industry itself, kind of fertilizing the next generation of crypto projects. And I think there's a lot of validity to that thesis, just given that Coinbase needs a lot of other pieces in the market to help boost itself up. Coinbase has a lot of abilities. It has a lot of infrastructure behind it, but they can't do everything. And there's a lot of other companies in the wing that can join them. And there's a lot of other profitable opportunities out there, especially with DeFi kind of just taking off only in the last year or so. And I think we could see a lot of money flow back into that. But of course, I'm not managing their books, so who knows what happens with it. Big give back to you, Zack.
No problem. So proceeds from this deal are about $900 million. They will be going to the more boring but equally noble ends of paying down company debt. So alas, a lot of this won't be recycled back into the ecosystem. They do own Backed, which is their Bitcoin play, and Backed itself is looking to go public soon through a SPAC offering. So that is the story of ICE's Coinbase billions. Naomi, what stands out to you? How does this reveal how things work on the street?
I think it's interesting. I mean, that's a huge amount of money. Did they take all of their money out of this? Did they leave anything in? Because if they're not betting on Coinbase anymore, if they don't think they're going to continue to grow and more people are going to enter the market, and it's interesting. I'd like to hear why and what they think might be holding it back. Like maybe they're just a really high risk venture fund. They want to get in the early stages so they can get more of the reward later down the track. But it's interesting that I don't believe they left anything in there. So I wonder what your thoughts are on the profitability and the future of Coinbase.
Well, I mean, so they invested in 2015, which was quite early, I guess, in the Coinbase journey. So the fact that they're taking that money off the table, no harm, no foul there. But I would be, I don't know. I don't know if he went into detail on this earnings call about why they decided to make that move, or if it was just an attractive opportunity to get some money out of the market. But yeah, that's a good question. Whether it sort of suggests that ICE thinks that it's the top, or that Backed is actually going to come and eat the lunch of future Coinbase customers. Who knows? But those are certainly good things to be asking. Ben, did you shoot your hand up down there for a second?
Yeah, I did. I thought the back question was really interesting in this regard. And Zack, you said, that they were going to go and put this money towards paying down company debt. I was wondering if they might use some of it to go and build out or further support Backed, who's expected to go public as well. And I think that's really interesting because in the future, it could be a Coinbase competitor. And so to have kind of stakes in both of those companies, I mean, maybe you win either way, but it seems like they might be doing a little bit of consolidating. But overall, this shows like it pays to get in early, right? Like we said, they were in there in 2015 as part of a $75 million raise, I believe, at the time. And I think that, this also is kind of the first time I think that we've seen since the Coinbase listing itself where somebody's seemingly taken all of their money off the table and really just cashed out fully. A lot of people said they were not going to do that at the time, sort of, Naomi, to your point, as a bet at the continued kind of rise and sustainability of Coinbase. So it's interesting to see ICE taking a different stake in that, but I do think it might say more about Backed than Coinbase itself.
Right.
Cool. Let's change gears here real quick and go to our second Coinbase thing. I'm sorry, Jen, just kind of squeeze this one in, and then maybe I'm going to throw it right to you, and then you're going to combine these thoughts, and it's going to be lovely. The other thing that was reported this morning is that Coinbase acquired the data analytics provider Skew to bolster its Coinbase Prime offering. And Coinbase Prime is its prime brokerage wing. It serves some of the deep-pocketed investors who like a white glove approach to managing their crypto investments. So this gives those customers a bit more real-time data in that offering, and suggests to me that this consolidation and a lot of M&A activity is going to follow. So I'm going to toss this to Jen. Between ICE and between Skew, what are you thinking on Coinbase at the moment?
Well, I was just going to add some information to what Ben was saying. I was reading earlier this morning that Coinbase did say they're going to pay down debt with this money, and that their leverage is down to 3.6 and their target is 3.25, and then they'll start buying stock back. But just coming back to this merger, I was reading the story and I was like, another day, another merger. Like when is it going to end? Like, who's going to merge next? And what was interesting to me about this story was that last year, 64% of trade came from institutional investors. And so this merger just tells me kind of what a lot of the mergers have been telling us in the past days, that there's obviously a lot of demand from institutional investors, and Coinbase is just, meeting that demand by combining with Skew.
Yeah. So crypto consolidation, right? We've been talking about it, I think, for a bit now. Crypto native firms either getting sort of absorbed into big traditional players, or other crypto native firms acquiring smaller crypto native firms in a time where the bull market is lifting all boats. Will, what do you see when you see the news of Coinbase acquiring Skew?
No, just the same point that you're making there. There's a lot of smaller firms being gobbled up right now because firms like Coinbase need that. They don't have the expertise. If you just look at corporations in general, they have a hard time being maneuverable and making these really specialized products. But if you can go out and buy a specialized team for the same kind of product lineup, it's better serving to your customers and to your bottom line, even if it's just expensive on the front end looking at that number. So I'd expect more of these. I think at CoinDesk reporting on these subjects, we were expecting a lot more of these and before the public listing. But now it's over, I guess we'll see a few more come out here and there.
For sure.
Gotcha.
And
well,
while we're
let
looking
us.
let
me do a transition, Naomi. Let's get out of the world of CeFi and go straight into the world of DeFi. Naomi, take it.
Absolutely. So everyone is looking at Coinbase at the moment. They're looking at people who are taking their money out, leaving their money in, wondering about the future of it. But in fact, the biggest competitor to something like Coinbase may come from an unexpected place. So we have ever more regulation for centralized exchanges, and we have this parallel economy that is developing and growing ever larger in the space of decentralized finance. So Coinbase has previously said that DeFi may be their biggest competitor, and now DeFi has reached $100 billion total value locked, according to CoinGecko, which is astronomical and really is just, it's such a powerhouse. A lot of people discount it because there is no central player, because there, aren't necessarily VCs behind the space. There may be, behind certain players in there. We can debate about how decentralized those players indeed are. But it's just such a wonderful emerging economy. I'm going to throw straight to our DeFi king, Will. Tell us what this means for the space.
$100 billion is a big number. And of course, we're talking before the show, that number can kind of depend on how you're choosing to measure DeFi. If you're measuring DeFi and Ethereum, it's about $65 billion. If you're including all the other chains, it's around $100 billion. And that's just remarkable given the year that DeFi had. Before February 2020, DeFi was under $1 billion total value locked, and it was only on Ethereum. A year later, we have multiple chains competing for DeFi applications, and we have multiple projects with $10 billion under lock. And I think the star of all these DeFi applications is lending itself. I think it's like the most intuitive project for anyone to understand. Anyone can understand, like, hey, I'll give you something. If you give me something back, I need to go purchase something with a loan. Makes very simple sense. I think we're going to see more iteration on how lending works in the near future. There's some exciting projects trying to figure out how to get those collateralization levels a little lower. Because typically when you take out a DeFi loan, you have to give over like 150% to 200% over what you're taking out. And it's like when you're just getting into space, it's like, why would I take a loan out if I have to give them more money for collateral? There is a lot of applications that you need to have loans necessarily to be able to use them for trading, for instance. But I see that going forward as the most important space for DeFi. And I think it's only going to grow if you look at the centralized areas, also big in the BlockFi and the Genesis of the world, where a lot of what they do is lending. And so decentralizing that aspect of the crypto market, I think, is only going to get bigger.
Absolutely. I think the other side of the lending, obviously, is the interest earning. Like Brady Dale did some great reporting on these yield farmers in the early days who are just like, oh, wow, I can actually make money from the savings I have rather than having it sitting in a bank account and it's just, depreciating every single day. So people were super keen to find an area where their money could sit there and earn them interest and earn them money. So it's just such a fascinating area. And what's most fascinating, I think, is like this Lego block aspect of it. All of these different things that are using components of each other and innovating and working together to find ever more creative ways to generate money and to, give people back value for the money that they're putting on the table. But Zack, I'd love your thoughts on this.
Yeah, I think the DeFi story is really interesting, and I think it's important to remember, like from the sort of small fry perspective, DeFi represents the ability to use your crypto without spending your crypto, which I think is really attractive to a lot of people who have committed value to these platforms. And then sort of on the whale side or on the professional trading side, you over collateralize for some of these loans, but you're able to sort of cover the cost of that loan by way of making bets that are likely to pay off across the rest of the ecosystem. So you're kind of, you're putting some collateral in, you're getting more chips that you can play in the grand crypto casino and then, pay back your loan as you would. So I think the fact that it's growing to this size, I think is really, really interesting. And, there's a ton of, there's still, we see projects every day. It's still different projects that are trying to optimize this system for as many people as possible to participate in what DeFi can accomplish.
Ben, what do you got?
Yeah. No, I think it was just really interesting because we talked about like last summer, I believe is like DeFi summer when all of this was getting rolling in a lot of ways and all these projects were kind of spinning up. And now it just seems like this growth rate from like you were saying, February to now is just like astronomical. It's really, really crazy to be seeing. And it kind of shows like, while it was being spun up last summer, this is kind of a sign that it's like here to stay. There's people building out all the different optionalities, trying to, sort of advance and utilize and hone a lot of the products that are on the market. And then also those that are trying to expand what it could look like in a variety of ways. So that was really telling to me. I really do wish we had a little bit better data about how many people are using this. In the piece we mentioned, maybe 1 to 2 million people, but it's really, really hard to get an accurate number. And that's something I would like to see because I'd be curious about, how many people are, eating these big cuts of pie or whether it is a lot of small fries, Zack, like you were talking about sort of getting in here. Because I think that'll be important about how it continues to develop. So that's something I'm going to be looking at going forward.
I kind of love that we don't have that much data on it because it means that it's difficult to know what's going on. And I love that about the DeFi space. But Jen, you had your hand up.
Chaos monger Naomi.
Ben pretty much said what I was going to say, so you can take us to break.
All right, I'll take us to break. Let's do this thing. All right, we're going to go to break, but then after break, we're going to talk about what a famous DC Comics artist has in common with the meme Disaster Girl. After the break, we'll talk about it. Stick with us. Thanks. It's The Hash.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Welcome back to The Hash. So before we move over to DC Comics land, we are going to talk about the state of media in Russia. So the Kremlin is cracking down on at least one media organization, Medusa, which is an independent news organization that has been labeled by the Russian government as a foreign agent last week. They are now asking for donations in fiat, Bitcoin, Ether, and Binance's own native token, BNB, after certain restrictions have been placed on the news media organization for being listed as a foreign agent. The team put out a statement saying that being labeled as essentially an enemy of the state, in a sense, has hurt their ability to garner funds from advertisements, which makes sense. But they're in rough patches here. And it kind of speaks to the whole sense of freedom of the press in Russia, and then the use case of cryptocurrencies to get around restrictions placed by the state on news media itself. Of course, this comes around as Alex Navalny, who is a prominent human rights and Russian politician, has been placed in jail for essentially what are propped up charges against him for interfering with the Putin regime. So I want to give this right over to Naomi. What's your take on this situation?
I think that it's such a wonderful use case of cryptocurrency, right? When you have the state cracking down and you need to get out of the financial system for whatever reason, cryptocurrency is just such a great alternative. So they said in their press statement, they said that the salaries of their workers are now potentially at risk because they might be designated as individual foreign agents. And if this happens, apparently if there are any errors with their reporting on salaries or anything like that, it could lead to even felony charges and imprisonment. So it's just a way for the government to exert pressure on these reporters, which is really sad to see. Freedom of the press is one of the most important things that any nation or any society can have. You need that fourth estate. You need that pushback and accountability. And so now that they've been designated as this essentially enemy of the state, it puts them in such a difficult position. Like they either have to give up their principles or they have to, find a way around it. And cryptocurrency may be that way around it. We've always talked about the inability of governments to control this incredibly decentralized phenomenon. And so we're, starting to see in real time as governments push back whether it fulfills its promise, whether cryptocurrency and things like Bitcoin are actually decentralized enough to allow people freedom of speech, to allow them freedom of financial sovereignty. And if this succeeds, it's just such a wonderful promise, and it's just such an exciting place for the world to be in. But Jen, I saw your hand go up.
I just want to say, while I was reading the story, I agreed with you. I thought, what an amazing use case this is to, juxtapose the headlines we've been talking about, the talk about Bitcoin mixing and privacy coins as things that only criminals kind of interact with. And what a great use case to see that journalists can be empowered with these things. And when you have a government who's really suppressing freedom of the press, there's a way around it and there's a solution. So it's great to see that, these things can be used for things that are not crime.
Mm-hmm.
Yeah, this really pisses me off. Let's get the matter straight on this, in terms of what the state authority means there. They're accused of poisoning their opposition members. The jailed opposition member that you said, Will, he is being denied medical attention by his doctor. This is an administration that has cracked down on protesters in every way, shape, and form, and is now cracking down on freedom of the press, which I think is so core to any country functioning in a transparent and accountable manner. And that is incredibly important. And in doing so, I think it's really important to say what some of the practical implications are here. One, I think that because they've been designated as a foreign agent, they have to put on every article in large font, this is published by a designated foreign agent. In a lot of ways, immediately undercutting the reporting they might be doing if you are somebody who is either afraid of the government or in alignment with it, potentially. But two, I think this also gets at, yes, this is absolutely a good use case for cryptocurrencies and getting around kind of state-controlled apparatuses in a variety of ways. On the other hand, let's talk about what money is doing here. Money is actually enabling a government to be held accountable, to cover these protests, to cover violence and other things that are directly impinging on people's rights, health, and liberty. And that's incredibly, incredibly important to have documented in an important and verifiable way, such that this is why newspapers such as this need funding. This is part of a larger state crackdown on media in Russia. And, it gets me so frustrated. And also, just to point out here, this is why we talk about KYC and AML being weaponized in a variety of ways, right? The reason people might not be comfortable giving from their bank accounts is because those could also be traced back by the government. And so when we talk about this and we talk about the potential criminality here, absolutely there are concerns around that, and those are worth addressing. But this is the flip side of that. This is not a hypothetical. It is incredibly real.
It's not the first time that cryptocurrency has saved the day regarding freedom of the press. Obviously, we all know the WikiLeaks story. One of the first bull runs in Bitcoin's history was when they started accepting Bitcoin donations, and then they expanded that to accept a wide variety of cryptocurrency donations, and it allowed WikiLeaks to continue to function. What's going on with Julian Assange right now? Because the US has an extradition order against him, so we shouldn't think of Russia as being this other that attacks freedom of the press and they're a terrible place. It's happening in the United States as well with this crackdown on Assange, and I would love more people to be talking about that. But let's change tracks here.
Sure. So speaking of KYC AML, the Ransomware Task Force, a private-public partnership and research group, has issued a report yesterday that focused on how enforcing, in part at least, and focused on how enforcing KYC and AML laws were key to reducing ransomware attacks. Now, ransomware attacks are essentially when a nefarious actor takes over your computer or network system and locks it down, encrypting all the files and all the data, and then, essentially says, hey, pay a ransom, and we will decrypt this for you. So cryptocurrency has long been a popular use case for these actors. And I believe last year there was over $350 million in Bitcoin given to ransomware attackers. And this is a thing that we've seen for years now, but really surged during the pandemic. And this was a way to potentially cut down on it, was enforcing these sorts of laws. But Will, I want to toss this one right to you, given we were just talking about some of the impact of KYC and AML in relation to our previous story.
Yeah, so I've not dug much into this story, but just on the basis of the headline alone and looking at the past hacks of major corporations like Equifax, for example, it just doesn't necessarily make sense that you can draw this conclusion. If you're handing your data over to a third party, that third party is now liable for anything that you do or anything that they do with the data. And if they get hacked, your data gets hacked. If you're holding your data yourself, if you're not handing over all your information to other people, that's only on you, and it's siloed only with you, and it's much more difficult to get. I understand that these hacks, when they lock your computer and demand cryptocurrency, are very specific. But the sense that you're moving your data from one isolated place to a big honeypot, it just doesn't quite make sense to me. So maybe you can walk me through that a little bit more.
Sure. I think what the sense here is, and it's not always outsourcing to third parties, right? There are obviously third-party data breaches that occur all the time. But I'm thinking about things like hospitals. That's really a popular thing here in terms of localized hospital networks that we saw happen even during coronavirus, which is really quite scary to have, hospital networks locked down during these times. But what I think they're getting at here is that, if you can enforce existing KYC and AML requirements on a variety of exchanges, like over-the-counter traders or even Bitcoin kiosks, then you could potentially trace where the exit flows of these coins might be going, or at least have somebody to go after behind them. A really interesting tidbit I thought that was pulled out of this in an accompanying panel was somebody who was on the panel from Microsoft said that mostly what's being used in these attacks is Bitcoin. It's not privacy coins. And they recognize that while Bitcoin mixers might be used, I thought that was kind of telling in the sense that, privacy coins have this connotation of criminality, but really it's Bitcoin being used most often here. That's in part because of the low levels of trading around privacy coins. But Jen, I saw your hand up, so I want to toss this to you.
Well, I actually just have a question for you. I was reading in the report that they said for this to actually work, it would need to be implemented on an international scale. So all countries would have to kind of get together and work together and enforce this together. What are your thoughts on that? It seems unrealistic to me. I don't think we've seen countries work together on anything.
I mean, Naomi, I'm going to toss this to you and then I can't answer, but take it away.
Yeah, that sounds like the most abhorrent, Orwellian, nightmarish, authoritarian situation I can imagine. One global organization controlling all flows of money, getting data on all people who send any financial transactions. I'm so glad that the situation, like geopolitical situation, is kind of this anarchic world where you do have vying powers, keeping balance with each other. Because if we did have one global order running everything, that would be terrifying, and I could not wait to get to Mars. But Ben, I'll throw this back to you.
Yeah, I think that I'm gonna take a little less Orwellian approach, maybe. But I think that just sort of in a global capitalist environment, I don't see that happening, right? I think in a lot of different companies, you see some of these lack regulations as a competitive advantage, particularly maybe if you're a small company and you're dealing with huge economic blocks like the EU or the US or other entities. I'm not saying that's a good or bad thing. I just think that's the reality. In a lot of cases, lacks corporate governance and ability to incorporate easily has led to some companies seeing real gains from legitimate companies, but also in some instances from groups like hacking groups or things like that. But I also thought another interesting tidbit in this report was that, there was kind of from one person who wrote it and advised on it, he was saying that we don't need more AML KYC laws, which I think is important because we've seen a push in a lot of ways to extend those, update various regulations and rules to maybe be a little bit more punitive. But he was saying, if we just enforce the ones we have, that could be sufficient enough. Doing that internationally, whole different question. But, he wasn't calling for further and further regulation. Naomi, I'll toss it back to you, though.
Yeah, I'm going to go back to the Orwell because I love that topic. We'll dig into that. You've got the IMF, you've got the World Bank right now. They're absolutely used as levers to coerce different governments around the world. When you had the Marshall Islands, for example, exploring whether or not, this was years ago, they were going to be, developing their own cryptocurrency. You literally had the IMF threaten them and say, sure, you could consider doing that, but you may stop getting, money. You may stop getting money from the US government. You may stop getting these payments that you have been getting in the past. When you have, for example, Julian Assange at the embassy, Ecuadorian embassy in London, and suddenly, he's handed over to the Ecuadorian government, and it just happened to coincide with the IMF giving billions of dollars to Ecuador. So, these world banks are just power hubs, and I would hate to see that power extended any further. But again, we'll challenge chat. I've got my rant out of my system.
No worries. I just want to briefly jump in and say, yes, ransomware is bad, but on the flip side, Will's story really points to the risks around further enforced AML and KYC, particularly in some countries. But let's take it to the light and cheery side of NFTs. Jen, what have you got?
KYC to NFTs. Okay, so Disaster Girl was trending on Twitter on Thursday, and this time it was because she just made $500,000. So Zoe Roth, who is now 21 years old, I believe she's 4 years old in that meme, sold an NFT attached to her meme for 180 ETH. So she's using this money to pay off student loans and donate back to charity. And her family still owns the copyright to the meme. So that photo was taken by her dad. So I honestly forgot about Disaster Girl until I saw her trending on Twitter yesterday. I'm going to throw this to you, Zach. What do you think of this? She's $500,000 richer at 21 years old.
Yeah, I think that's great. Great for her. I'm really interested in the buyers in this market. Pseudonymity is cool. The pseudonymous account that purchased the NFT was linked in the New York Times story. I'm really curious who is behind that account. I wasn't immediately familiar with it, and I'll have to dig around and see if anyone knows.
Justin Sun.
Because it could be Justin Sun. It could be a Justin Sun burner account. That's very plausible. I'm gonna go ask Justin Sun after the show.
Zach, you're like
I'm curious about sort of the buyer mentality, right? Like these are sort of like mini advertising campaigns for a technology or a suite of technologies that interested parties are interested in promoting, right? It's a great story of charity and of wealth generation for Disaster Girl. I'm very curious that calculus behind the person who committed that, that 180 ETH, right? And again, we've talked about this often. Like they may have bought that ETH when it was in the 2 digits instead of all-time highs, right? So the cost calculation may be different, but just the fact that they're signaling that this is an important thing that could be worth spending $500,000 on has the follow-on effect of capturing people's attention and saying, oh, okay, maybe there's something here. So when I see stories like this now, I'm very curious as to what are the motivations behind the buying side. Because we're seeing NFTs sort of become this great sort of charity vehicle. But again, people are spending large sums, and I'm just very curious about the why behind that.
I always look at NFTs from the creator side. And what was interesting about the story to me was that Disaster Girl, she said that she'd always felt like powerless over this meme. And this was a way of her taking control and almost getting the power back into her hands by being able to make money to pay off her student loans with this meme. So that was really interesting to me. Will, I saw your hand pop up there.
Yeah, it's interesting that the family kept the copyright for the picture, even though they're selling the NFT, because I think a lot of people have kind of conflated the two ideas nowadays, and they've kind of I think the NFT community has desired that the copyright accompany the NFT when it's sold, but of course you don't always have to do that. And so I think that kind of paints the picture where NFTs need to go. Like if it is going to be a copyright for the internet age, which is itself just like a valuable idea prop, then you need to start seeing some of these higher profile sales of NFTs be accompanied with like the legal protections around it. I think on the whole, I like it when we see more legitimate projects sell NFTs. I think really famous and like memes actually kind of fit into that category. Like her meme is like well known. Everyone knows that image. Like everyone understands it, and ownership of that as an image, I think people are going to be interested in that. I think there's a lot of other memes out there that kind of fall in the same trajectory. There's a lot of bad NFTs out there, but I kind of like some of these more creative ones, like the basketball cards, the baseball cards, the memes. Those make sense because everyone uses those and can relate to them. And at the end of the day, you can have some sort of property rights around them for the internet.
Well, speaking of copyright and some of the more famous artists out there, Batman NFTs are actually hitting the market. And what was interesting about this story was the artist behind them. He had a pleasant conversation, he said, regarding IP with DC Comics. Of course, we spoke about it. I believe it was a month ago now. DC Comics issued a notice to all of their artists saying, don't consider NFTs. He owns his artwork. So he's launching, I think today, a series of NFTs that feature Batman. And so this is an interesting kind of addition to the copyright conversation. I think, Ben, you had your hand up before I transitioned stories.
Yeah, it wasn't for this story necessarily, so I'll just briefly kind of hit on it and then pivot. But I think like the when we talk about the meme economy, right? Like memes are used so often in crypto and sort of retroactively like paying people for their image use in ways that have been, proliferated across the internet, I think is really important and a kind of interesting narrow case for NFTs because you see this used so often where like people have interviews with like the original people whose photos were used as memes. And often they like just have to send out tons of DMCAs or they just accept it, but there's no way for them to monetize it. And so I think it's really good to see them sort of being compensated for their just image being spread out there all over the place into contexts that they weren't even aware of or necessarily approving of. So that's one thing. But pivoting to the Batman IP thing, I think it's interesting because we spoke previously about how comic book companies might be real gatekeepers around this. And they were potentially warning freelancers against selling images. It is nice, I guess, to see that can be sort of worked around with a pleasant conversation. I got a kick out of that aspect of the headline. But I think, it is worth sorting these things out and goes to like huge copyright questions like Will was mentioning. Like we're going to have to answer these or else we're going to see like a real splintering of the NFT space, it feels like, around what you're actually getting. But Zach, I'm going to toss it to you.
We did reach DC Comics and they declined to comment. So that is one person's telling of how that conversation went down, just full disclosure.
Maybe it wasn't so pleasant.
We don't know. But I was sharing this with Grady Dale, who is our resident comic book nerd. And he was like, oh, this guy is like a legendary artist. So, this guy I think is a big deal, like in the DC Comics canon. So maybe just that being in play had something to do here in terms of what that conversation looked like. But yeah, I mean, we haven't seen an official DC Comics, NFT launch since we last heard from them in March. And I'd be curious if something else was in the works down the road. But yeah, back to you, Jesse.
So you're telling me.
Oh,
so clout translates to clout always.
I guess so. Okay, it's time to go home. The time to go home song is here, and that means it's the end of the hash. Another great episode hanging out with you four folks and the rest of you all, wherever you're watching this. Thanks so much. CoinDesk TV is here, 3 p.m. Eastern, all about Bitcoin. And I hope you have a great weekend. The hash will be back on Monday. And until then, bye.
Bye.
Peace.
Bye.